Good afternoon, welcome to Monty.
Thank you very much.
Thank you.
So we have arranged for you a little bit of Italian bubbles. This is the king of sparkling wines. Franciacorta.
Thank you.
Thank you.
It is an amazing view, isn't it, with the
It
whole
is, it is.
Marina Bay.
Few people can say they wrote the book on an industry, but Tom did, literally. He has published 9 books and advised governments and MNCs on the energy and commodities market. Today, he's tackling a global problem worth $1.5 trillion US. I've traded global financial markets and advised some of Asia's wealthiest for more than 20 years. Yet, I'm constantly in search of new perspectives on finance, business, and of course, life. So I booked tables and put wine on my tab just to bring you some food for thought. Where does one take a commodities expert out for lunch? To a gem set in Singapore's iconic bay, of course. This dining destination serves up modern interpretations of Italian cuisine, while emphasizing a taste of tradition.
So here we have a little hummus bush. This stracciatella cheese with the eggplant caponata on a sesame cone and olive oil caviar.
Thank you. Hey, cheers.
Yeah.
One bite.
Yeah.
Beginning as a floor trader in the London Oil Exchange at the age of 17, Tom's career has spanned the globe in commodity trading, investment management, and commodity finance. He is considered an international expert in his field.
What fascinates you about commodities, right?
Yeah, that's a good question. Actually, the thing is, probably I get very bored easily with
Okay.
things. Short attention span, perhaps, I don't know. But the commodity industry, there's so many dynamics because you've got everything in there, you know? So you've got geopolitics, climate change, you've got energy, you've got everything about growing stuff, shipping, weather can mess things up. There's always change, there's always evolution, sometimes revolution. That, you know, there's never a dull moment. Sometimes it's a little bit too exciting, you know, and it's kind of
Yes.
like, you know, you don't want that either, right?
Do you think it's one of the most archaic industries out there in a way that commodities are being traded, mined, and priced?
Yes, dig it out of the ground or grow it
Yeah.
and stick it on a ship and move it.
Ship and move it somewhere and sell it to somebody, and that's it, end of the game.
Thousands of years been going on, right? So
And sometimes it's controlled by a few parties, right? You know, like diamond trade is very controlled.
commodity industry takes a while and trade as a whole to change.
Yes.
If it doesn't have to change, you know, I think it's
It worked, why fix it kind of
Exactly.
mentality. Yeah.
less than 1% of the world's shipments are electronic bills of lading, which, you know, they're controlling documents for the cargo. The technology's been around for like 20 more years, so why doesn't it?
So why? Yeah, it's quite mind-boggling that commodities as an industry is not so open to change and technology as you would expect it to be, right?
Without mentioning names, you see sudden adoption by big companies of electronic bills of lading or other
Yes.
types of fintech kind of angles or blockchain stuff. And it usually happens because, oh, we've lost some money on that.
Yes.
So we need to change how we're doing stuff.
Only when you feel the pain and the loss,
Yeah.
then you react, right? True.
The hardest lessons are the ones that cost you hard cash. Yes.
Yes.
So, and then that can
It's
suddenly
like trigger
bring change.
reflection.
Yeah, exactly. Yes, exactly.
While digitalization has permeated virtually every sector, the commodities industry has only started to play catch-up in recent years. One area of increasing focus is in the digital transformation of trade finance. This centuries-old practice refers to the financing for trade between the seller of goods and services and the buyer. This is usually provided by intermediaries and can manifest in the form of letters of credit, guarantees, or insurance. Even though an estimated 80% of global trade is covered by trade finance, with over $10 trillion in annual flows, in some countries, there is a large gulf between supply and demand.
There are reports that say that 1.5 trillion of funding that's not available, right, to companies that actually require trade finance to
Yes.
get the business going.
The 1.5 trillion gap, that was before COVID. There's been some bank surveys saying that it could be double that. post the global financial crisis and a lot of regulations changing in banking, it became increasingly hard for banks, even if they wanted to actually support smaller firms in their trade finance. The thing is, of course, is that SMEs, they're the biggest employers, and they're certainly the ones that create the innovation.
According to the World Economic Forum, trade finance is one of the top 3 export obstacles for half of the world's countries, and notably the poorest. Globally, more than half of SME trade finance applications are turned down, and half of this is in developing countries in Asia and Africa. This gap is estimated to reach $2.5 trillion by 2025, as supply chains move away from China to poorer developing countries. This not only puts up a major wall between global markets and SMEs, it also prevents trade from fulfilling its potential to promote growth and development and create jobs.
Back in 2016, me and my co-founder John, we looked at the problem saying, well, is this problem going to go away? That's the first thing. Is this a systemic problem? And so we looked at why banks couldn't lend the money and why SMEs couldn't get it. And increasingly it was, regulation on one side, but also lack of data.
It's not that the businesses are not viable or they have no track record. It's just the data is not available, right, to a lot of the banks, especially in emerging countries.
If you go to a bank and you ask for some money, why are they going to charge you the difference between credit card rates of 25% or they'll lend to you at 3%?
Yeah.
Usually it's because of security or the transparency, the data, the track record you have. What we found is that the banks can't see the track record of these SMEs because sometimes they're less than 3 years old, or just the cost of doing it was too high. So we said, well, let's not lend money, let's not give credit at all, and buy the commodity and own it. So we actually have an asset there.
Tom's strategy is to focus on what you can control and leave what you can't, choosing to focus less on the creditworthiness of the sellers and the buyers, but on the cargo itself. The key to this unique non-lending approach is a middleman who will buy the cargo from the seller, ship it to the destination, and sell it to the buyer. By doing so, Tom eliminates credit risk and only has to worry about cargo risk.
We buy and we own the commodity during shipment and storage, so we're comfortable with the risk because if anything goes wrong with the buyers, we can sell that commodity to somebody else and get the investment back. If anything goes wrong with the shipping, we have the marine all-risk cargo insurance, and that's been around for centuries.
By owning the cargo, controlling its shipment, and having an all-encompassing insurance against theft, loss, or damage, Tom creates a situation where his risk to finance any trade is so low, he only has less than 1% chance of failure. This is a textbook example of risk transformation, where a negative risk is turned into a competitive advantage.
So our next course is Mayura Wagyu beef tartare. We highly recommend to blend the onion sorbet with the raw egg yolk, capers, and the pickles all together for the best result in terms of flavor profile.
Thank you.
I like what you're doing at Tradeflow. It's very clever, right? Because you are de-risking it totally, right? By putting insurance on the asset.
That was the easy bit. Another 2 years followed thinking, how can we do that, but actually do it ourselves profitably and get a return for investors? And then that came down to digitization.
Leveraging the experience in finance and technology, Tom and his partner John Collis started Tradeflow Capital Management in 2018 to disrupt a centuries-old industry with a hybrid fund-fintech solution. The fintech component uses a digital platform to take care of all the necessary applications and documentation for onboarding and invoicing. The fund allows investors to invest for stable, bond-like returns, while enabling Tradeflow to build up a pool of capital to enable more SME transactions. In its first 3 years, Tradeflow has successfully invested in over 1,000 transactions across more than 18 countries and 26 commodity types.
Our processes can actually help the SME do the deal, and the banks can lend money to our fund at an investment grade level. And so, hopefully it becomes a nice virtuous circle. Yeah.
So you're actually getting capital to be allocated to where it needs to be, right?
Yeah.
And the most efficient manner.
Yes, but it's not just about enabling trade. You can even help improve lives. In Rwanda, in 2018, when we first started supporting the farmers, they came to us saying, we can borrow the money, but locally, US dollar is very expensive. So we're going to get charged like 20% interest. And we have to put up guarantees because the banks, obviously, they couldn't see the full supply chain. Whereas we could do the same thing for around 8%. And we're only charged on a daily basis. So as people are buying stuff back, the clock stops. And so where we were able to help was give them the purchasing power to actually order exactly what they needed from Chinese manufacturers, bring it in bulk, and then farmers to be able to buy that in the packets that they could afford locally. The distributor was a cooperative, so they made a margin, and the farmers got to buy stuff at a cheaper price, which then meant they had a better margin on their crops. In a way, we're kind of incubating and nurturing and helping them build the business up to a level where they have the right track record and the right size that normal credit lending will work.
I can imagine the impact on community will be huge, right? You're helping SMEs grow, and at the same time, they'll be expanding capacity, hiring as well. So you're effectively helping the community expand and grow at the same time.
Yes, and we're making money. So,
Yes.
so the thing is, though, it's a win-win. It's rare where you get the opportunity to actually apply your knowledge on maritime and law and technology and banking and finance and bring that together.
Aside from being a published author and industry advisor, Tom is also a fintech pioneer. In 1998, he founded the world's first internet-based secure trading network for swap derivatives in the oil industry at the tender age of 27.
I was based in Singapore and working for a bank out here, and we didn't have a lot of resources on the commodity division side of things. And when you're stuck with a lack of resources, you start to become a bit entrepreneurial and try how to get the job done. And so created a website. All our customers across Asia, they could submit inquiries and stuff like that through the internet. But the bank at the time didn't want to progress that. And I'm thinking, maybe there's something here because people want to do this and it's more convenient. So I said bye and set up SwapNet.
SwapNet was an online system that allowed traders in the energy and commodity sector to view quotes and trade over the internet.
It was actually creating a digital ID for the traders with a little smart card reader on the computer so that they could identify themselves and create a legally binding trade. It was all pretty cutting edge back then.
So you're way ahead of your time.
Yeah, sometimes it's good to be first. Sometimes it's really tough. The internet was very new. No one really understood much about it. There was no online banking those days. So banks were like, well, what's this, Here in Singapore, at least, you've got this big commodity trading hub. And I was able to sort of go door to door to people and saying, wouldn't it be easier if you could just go online? I don't think the expression was even built then, So rather than a website, I bought computers, put the software on the computer, and actually just took the computers to people's offices and said, right here, plug it in, it's ready to go.
Building trust in digital networks has been a central theme in Tom's work. At Tradeflow Capital, he's working to increase transparency in his trade finance gap solution with the help of cutting-edge technology of today.
One of the big problems is trust, whether it's in trade or identifying yourself. With Tradeflow, although we don't give credit at all and buy the commodity and own it, but that still means we have to do some evaluation. So we actually have a scorecard for evaluating each trade. a mechanical process so that we can actually look at loads of transactions and quickly say yes or no. We have a digital KYC AML system, anti-money laundering system. It has to go and check UN databases and everything else to make sure people are not blacklisted, not wanted by the FBI or something like that. But all the information about the companies just digitally comes down from government databases from all over the world. We developed IoT devices, Internet of Things, to actually track where the container is or the condition of the container. These are all things which were first built for tracking Singapore Armed Forces, make sure they don't leave anything behind, after the, oh, where's that gun gone? That's probably one of the big transitions over the last even 5-10 years, is that some of this technology is not new, but the fact is now it can cost you a couple of cents to stick a tracking device on a bag of rice, or a couple of $100 to track the whole container, give information about the humidity, the temperature, where it is. And so when you can sit in Singapore, watch a map and see a truck in Dar es Salaam going along the road, and if it deviates from the road and goes off somewhere else, you're alerted. All of this data just gives transparency and reassurance of, well, where is it? How is it being handled? What's the quality going to look like when it gets to the other end of its journey? That's the key thing that enabled us to actually make the business work. Digital trust.
Tradeflow has been independently valued at about $50 million and was acquired by a company in the United Kingdom in 2021. With fresh capital and an expanded geographical footprint, they are powering the next phase of growth.
Can you share a bit more about your vision? What's your future plans for the company?
So, in terms of the vision, well, it's actually just trying to scale up using more and more AI. So we're working with Singapore Institute of Technology here and co-developing the AI system now to trawl through this huge amounts of data oceans, as it were. For tracking ships, looking at weather patterns, looking at port congestion at ports, and actually look at what we call predictive analytics. So if your ship probably is going to be delayed, you don't need to rush that truck in, or you can actually use a different truck to pick up the container. That can also even reduce emissions as well. I'm hoping that eventually we'll be able to link the data we're getting from all of the cargoes that we've got going around the world. That data going back to insurance companies who can say, well, you don't have to just look at the statistics of historically, what happened and how you could end up paying out money on your insurance contract. But here you can actually in real time see how things are done.
Yes, and also I think lower the pricing.
Or, it lowers the pricing where things are managed well. It increases the pricing where things are not being managed well, but then that at least encourages people to improve their processes and how they manage the trade. If the price is just fixed, where's the incentive to do better?
Correct. So, quite an interesting proposition you have.
As a fund and a fintech, we are in a position to encourage change, but people can't change their behavior unless they know what's happening. So again, back to data. I still remember when that was a ferry terminal and the boats could still come in and out here.
Yeah, I remember. This whole area was empty land.
And there was nothing here, just trees.
So with your experience in shipping and in commodities, right? What are the new trends you've noticed?
We've already seen a lot of these innovations around crew management, around the management of engines, ships, cybersecurity for ships as well. Because as the world gets more connected, it also becomes more vulnerable. I think the way things move around probably will change. We've already seen huge developments in the fuel technology for ships, reducing carbon emissions. I think probably we'll find that soon there'll just be electric ships going around the world. And also here in Singapore, I've even met some very interesting companies, one in particular that's even driving nuclear power for ships. So using thorium reactors and salt reactors, which don't create all the nasty stuff from uranium, but can actually drive a ship for 20 years and even make medical isotopes, which have value in hospitals and medicine, whilst being clean for the environment. So I think shipping will carry on, but I think there'll be a dramatic change over the next 10, 20 years.
From sailing ships to rockets, the next frontier for commodity trading is up in space. Morgan Stanley estimates the space economy could be worth over $1 trillion by 2040, while Bank of America thinks we'll get there a decade earlier.
Do you think having a commercial business in space is something that's achievable in our lifetimes?
Very much so. I mean, just in 5 years, we've seen so much developments there. SpaceX and Virgin Galactic space tourism is happening. At the International Space Station, they're already testing an expandable capsule. So you can actually send it in space really small, and then like it has a frame, it actually just expands. And that's going to be the building of a space hotel. But aside to that, there's very serious sides to things. Talking about like trade flows, international trade and commodity trade sometimes has created imbalances. There's a lot of oil being produced in the Middle East, or a lot of gas being produced in Russia, or a lot of now rare earth metals being produced out of China. And sometimes this creates some tension, in the global kind of ecosystem. But obviously in space, on asteroids, even on the moon, there's a lot of these very important rare earth metals for technology. Talking about fintech, but these rare earth metals are important for the technology that we use, the hardware that we use. And so going to space and mining stuff could potentially bring more balance to the whole geopolitical sphere here on Earth. There is the sort of de-globalization that's going on. So it's a bit uncertain, what will the future hold? But, politics has come and go, empires have come and gone, but trade has always been there, with people moving, traveling, exchanging culture and languages. And trade has always managed to, like a river, has always managed to find its way back to the ocean. Trade has always been able to break down barriers, develop connections between countries, and shaped the world that we have now.
To hear how Tom is using fintech to make ESG and SDGs more inclusive, tune into Lunch with Masters of Finance podcast on channelnewsasia.com/listen.